Michael, U.S. investors have traditionally maintained a domestic or a home bias,
Right.
but that's shifting recently. We've seen international stocks and emerging market stocks do very well. Why is that so?
Well, that's interesting point. Absolutely true. But Liberation Day is much broader and deeper than just what we saw on trade. It's really represents a paradigm shift. It's a U.S. withdrawal from the Security and Trade Pact they inspired, over decades, and really benefited the U.S. and U.S. corporations over decades. But we're finding now that maybe that went too far. Globalization went too far, and it's no longer serving our interests. We've seen the manufacturing industry get hollowed out, or manufacturing jobs lost, and more recently, national security vulnerabilities have emerged. So we think that the U.S. is clearly identifying a policy paradigm shift. We think that that's fine, but there's going to be a price to pay, and the price is likely to come out in terms of a reduced optimization of earnings, profit margins, return on capital for U.S. corporations. And we think that that's going to lead to the beginning of an outperformance phase for non-U.S. equities.
Okay, but aside from what's happening here in America when it comes to logistics and trading, can you talk about the fundamentals about what's going on abroad?
Sure. So, fundamentals for non-U.S. companies, they've actually been improving for some time, and we've been calling that out. I think the issue is that not many investors have really been paying attention or listening. So I would say what Liberation Day is also doing is it is kind of a wake-up call for those investors and allocators that have been underweight U.S. And it's sort of highlighting that these fundamental trends that have already been in place. But Liberation Day is really amplifying some of that. It's accelerating the weakness in the dollar, and it's really serving as a kind of a wake-up call for investors to wake up and take notice.
Okay, so in which regions are you finding the most attractive companies? Or do you choose the country and then you choose the stocks, or you just choose the stocks no matter the region?
Well, first, our process, we're a fundamental bottom-up, kind of investment organization. We really do one thing. We invest in, quality growth businesses run by value-creating, talented entrepreneurs, businesses that have sustained, competitive advantage, durable barriers to entry, that are going to be intact for a long time, which leads to premium return on capital and excess, I'd say, outperformance over long periods of time. That is more scarce in non-U.S. markets, more entrepreneurial entry in the U.S., but it still exists. And so I would say our advantage as investors is that we take that approach to non-U.S. investing, and we hope that allows us to differentiate and outperform. In terms of where we see that, where we're looking, I would say we're trying to identify, our process is bottom up, but we're starting often at the theme level. So we're trying to identify where are there major inflection points at an industry level in a country that we think, leads to rising pricing power, expanding profit margin or stronger return on capital. And that can happen both in a country or at an industry. So the best example of recent theme would be deglobalization and supply chain diversification. A lot of people talking about that. We've been focused on that really since Russia's invasion of Ukraine, that really shakes up and is triggering deglobalization. It's a different geopolitical kind of paradigm we're seeing. And so, we've added a number of positions in the last couple of years to that theme. And I'd say that's kind of how we use the thematic identification to set our compass and to find the bottom-up opportunities.
And what do you do with the dollar? Because as you said, the dollar's been declining. A lot of worries about the dollar. We've seen gold go up and Bitcoin go up, perhaps as an alternative. We're going to find out. So when it comes to your portfolios, what are you doing with foreign exchange? And as well as how much are you looking at individual geopolitical problems in these different countries? Because it's hard to keep up.
So we really don't do anything per se about the dollar. I would say what we're seeing happening is a big tailwind for us, because after a long period of a dollar bull market, I think, the geopolitical environment, the Liberation Day and the sort of aggressive U.S. trade protectionism and, foreign policy isolationism is really changing people's kind of calculus when they look at the dollar. I would say, again, these trends were already in place, but what this is doing is calling investor attention. If you think about it, the mirror image of a declining U.S. Trade deficit is a declining U.S. capital account surplus. What that means is, as we aggressively move to reduce the trade deficit here, there's going to be substantially less foreign dollars being recycled, flowing back into U.S. securities. This is something that's been going on really for decades, and we've seen the foreign sort of investment balance, which was neutral, zero, in around 1990, at the beginning of the fall of the Iron Curtain, In 40 years, you now have foreigners own $30 trillion of U.S. securities, 30 trillion more than we own of foreign securities. That is 90% of GDP. I think when you say, what am I doing about the dollar? I am just going to watch as it continues to play out, and that, super tanker begins to turn, because that becomes a tailwind for relative performance and relative capital flows of non-U.S. And I think that's we just fired the gun on that.
All right, and then finally, one area of the world that I know you like is India. Can you talk about why you like this particular region? And once again, you can talk your book. If there's any stocks you want to talk about, feel free.
It's an incredible opportunity. I would say of all jurisdictions in the world, we see this as the most exciting place to invest because there's strong secular growth. We all know that. But more importantly, the Modi administration now in his third term has implemented, just a myriad of productivity enhancing reforms, PLI reform, GST tax reform, tax cuts. It is accelerating this move of manufacturing and supply chain out of China into India. India is the #1 beneficiary. In addition, you're just at the early stages of digitization. So think of it as being 10, 15 years behind China. So that's really inflecting. And so you're bringing 1 billion, consumers with broadband cellular for the first time, engaging there, participating in e-commerce, in food delivery, in fintech, et cetera. And then last, geopolitically, they stand to benefit the most because they are, an ally of the West. And so you're seeing, increased and enhanced trade and military, alliance between the West and India, because India stands as the one shining democracy within Asia that can stand as a counterbalance to the rise of China. So India's place in the world is on the rise. They have secular growth. They have productivity. I don't really have a lot of time to talk about stocks. We own many of them. We have, in the emerging market strategy, we're roughly 30% India, which is a big overweight. We've been there for several years. So that's really our highest conviction. I'd love to come back on and talk more about specific stocks.
Absolutely. Well, thanks a lot for coming on and talking about it.
Thank you.